Hey guys, welcome to another episode of Trading Like a Pro with Kelechi. Now, today I want to talk about one of the most basic things, one of the most basic ideologies of trading, which is how to identify a trend change. That is how to identify when a trend is about to change. Now a lot of traders don't really understand this concept, so they go about chasing candles. Now it's a very wrong thing to chase candles on this market because candles can be very deceptive. Now why do I say that? If you have taken time to go through several brokers, you find out that a lot of different brokers print out different candlestick patterns. For example, I'm looking at Owando for now. Now, if on Owando you see a 4 hours engulfing pattern, best believe it that if you go to maybe FXCM or any other broker, you could see a different kind of candle pattern. So what are you going to do at that point? It means that some other traders that are on FXCM are looking at a different candle pattern, while the ones on Wando is looking at a different candle pattern. So now, in order to solve this issue, I've learned not to chase candles. I've learned not to just be looking at candles. So what I look at basically is the market structure. What is the price structure? Or you can call it what is the trend structure of the market. So today we're going to be talking about that. Now, if this is your first time of coming across this channel, I would like you to subscribe to the channel and also give us a thumbs up. It helps us with the algorithm of the channel. So sit back as we dive into today's topic. So how do you identify the trend change? Now I would like to bring out let's do this. Let me bring out a path marker like this. Now the most simple form of a trend is this. So once you are able to spot this kind of trend on the chart, just know that we are in an uptrend. It means that we are in an uptrend. Now, how do you identify an uptrend? An uptrend has the characteristics of making higher swing highs. Now, these points are called the swing high. Let me see if I can get these are called the swing highs, the swing highs, the swing highs. So you see that the consecutive swing highs are higher than the previous one. So this is higher than this in price. This is higher than this, and this is higher than this. So also look at the swing lows. We call these swing lows. You have higher swing lows as price progresses. So once you have this pattern set up, you know that we are on an uptrend. Having said this, how do you now identify a downtrend? It's simple. The opposite is the case. We start having lower swing highs and lower swing lows. Lower swing highs and lower swing lows. So we have lower swing highs. You see that the consecutive highs are lower as price progresses. So it means that at this point we are in a downtrend. Now you now ask yourself, how do I play in a market like this? If the market is going on an uptrend and is going on a downtrend, how do I get into this market to make money? Do I just jump in because I have seen the candles move? No, don't do that. I will explain the connection between candlestick patterns and market structure. So let me dive into it as we go on. Okay, now look at this. How do you identify a trend change? For example, if you had an uptrend happening this way, what you need to focus on is the last swings. So this is the last swing low as per example. while this is the last swing high. So your focus should always be the last swings. Forget whatever has happened in the past. Look at this last swing. For every trade, when I come in, what I look at basically for trade implementation is the swing highs and the swing lows. It's as simple as that. Don't complicate your setups. Look at the swing highs, look at the swing lows. So once I see price break either of these. Now, for example, once a swing low have been formed and there's a swing high, what I'm waiting for is which is going to be broken. Now, if I see price come and break a swing low, a previous swing low, what this simply means is that we are about to go down. Now, all right, so the focus should always be on the swings. So you're looking at the last swing low and the last swing high. Now, there are some people that would say that once a trend line is broken, it means that we are about to change trend. For me, that is not the case. What I look out for is the swing highs and the swing low. Now, let me remove this. Now, let's say that the swing low here, price comes to close below this swing low on a particular time frame. Let's say we're dealing with the daily time frame now, and there is a daily candle close below this swing. Once there is a daily candle close below this swing, if you check across all brokers, you will notice that there will be a daily candle close. So it is uniform across all brokers. Now, what may not be uniform is the candlestick pattern or the type of candlestick that has closed. It could be an engulfing candle, it could be a doji, it could be any form of candle that has closed below. But once it closes below, you know that we are about to go down in the case of an uptrend that wants to change to a downtrend. So once we have this, now you start preparing your mind on how to make entries or do executions on this trade. Now, you are not to execute as the candle closes. Usually what I'll do is I wait for a return into this range, because I call this a range. I wait for a return into this range to an optimal price. Now we'll talk about optimal entries in another video, but for this video I just want to let you know how to identify a trend change. So once price has broken a swing low, it means that we are about to reverse to the downside. I hope this is clear. Now, before I go on, if this is your first time and you're getting value on this channel, I would ask you to subscribe to the channel and also give us a thumbs up. All right, so let's look at a case of price moving from a downtrend and trying to reverse to an uptrend. That is a reversal from a downtrend to an uptrend. Now it's simple. What you are to look out for is the swings, just like I mentioned in the previous section. Now this is the swing high, the last swing high. You also look for the last swing low. Now, what are you waiting for? You want to wait for price to come back and close above this swing high. Now, once we have a close above this swing high, remember it has to be a close on the time frame you are on. For example, we are on daily time frame. Once we have a daily close above this swing high, it is an indication that the buyers are in charge now. So what do you need to do? You start looking for ways to make an entry. Now, bear this in mind, you are not to make an entry once there is a close. There are other filters or there are other criteria which I use. Usually, let me give you a hint, but this is usually for the premium students. I may not be able to share that. So if you want to get information on our one-on-one tutorial classes where I go into depth about trading, you can join us on Telegram. It's free. Then when you come on Telegram, we can give you detailed explanation on how things work and how you can trade effectively and make money from the financial market. Now, usually what I wait for is a return into an optimal price before I take off and take advantage of the trend that is just about to begin. Now, these are usually will give you awesome risk to reward ratio. Now, we'll talk about that some other time. Now, so when you have seen a break of the high, of the last high, is an indication that price is about to go up. So you start preparing your mind mentally, prepare yourself mentally on how to take the trade. I believe that this information has been helpful to you. And if you are a first time caller or you're just coming across this channel, I would like you to give us subscribe to the channel, also like our videos, put on the notification bell so that every time we release a video, you'll be the first to see this. Now, there are other things I would like to talk about when it comes to um, trend structure and trend reversal. Now, they are called the fractal structures. If you have been around me for a while, you will have heard me say that price is fractal. Now, what does it mean? It means that this same thing happening on the daily also happens on the um, 4 hours time frame, on the 1 hour time frame. It happens even down to the 1 minute time frame. Now, what we usually want to wait for is for price on the lower time frame to align with what is happening on the higher time frame before we take a trade. So I'm going to do a follow-up video explaining how to analyze from a higher time frame to a lower time frame. Some call it the top-down analysis, while some call it the multi-time frame analysis. So what I'll be doing is to explain how fractal structures relate with higher time frame structures. What does that mean? How lower time frame structures relate with higher time frame structures, so that when you are taking your trade, you're not taking your trade based on just one time frame perspective, but you're taking the trade based on the entire flow of the market, or you call it the order flow of the market. Now, thank you for joining us on this video. See you in the next video. Thank you.